Cool. Hello, hello, hello. Hope everyone enjoyed their lunch. We're going to get started with the next panel. The topic of the panel is space investment going mainstream, and it will be moderated by Sarah Cruddas. She's a British space journalist, TV presenter, and author, and she's also currently director of marketing for Space for Humanity. So I'm just going to hand it over to her and let her take it away.
Okay, thank you very much for that brief introduction. Yeah, so we're going to be talking once again about space investment. I know we've had quite a few panels the last few days about this, but we're looking at the pivot we're seeing at the moment and how it's changing and the potential to go mainstream. So we're hoping to cover how we got to now, what's happening at the moment, and what could potentially happen in the future. So I've got Joe, Tom, and Bogdan with me. And if we can just go down the line first and just briefly introduce yourself and what you do.
Thanks, Sarah. I'm Joe Landon. I'm the chairman of Space Angels, and we are a angel fund and venture fund focused on early-stage space investing.
Tom Gillespie, and I'm part of the investment team at Incutel. Incutel is a strategic investment firm that works primarily with the U.S. intelligence community, a little bit with the defense community as well. And we invest in things that are commercially focused, usually venture capital backed, and kind of piggyback off that commercial innovation to solve intelligence challenges. We've been looking at the space sector pretty seriously for the last probably 4 or 5 years. Have done a number of unannounced investments, pretty much, mostly unannounced. But we've been pretty active in the sector and are looking to continue that.
And so I'm Bogdan Gogulan from NewSpace Capital. It's a Luxembourg-based private equity firm that specializes in space, everything space. We're looking across the value chain, and we have a global focus. So we have team here in the US as well as in Europe and in the Middle East.
Okay, and before we actually start talking about what's happening, I think it's important that we actually define what we mean by the space industry. Do we mean the space industry or do we mean the space economy? Because if you look at a lot of the recent reports, particularly the Morgan Stanley one, they list companies as diverse as Alphabet, for example, as being a space company. So when we talk about space and investing in space, is it just another place to do business? And should we really look at this as an extension? So instead of SpaceX being a launcher company, they're just a transport company.
But yeah, so I completely agree with that. I think that it's a mistake that is frequently made by people, by ourselves in the space industry, to think that space is an industry, because it's not. Space is a place, and places don't have industries; they have economies. So I think it's more accurate to describe space and what we're doing as growing an economy in space, not growing an industry in space. And as Sarah mentioned, there's going to be lots of industries that do business in space, like energy, transportation, communications, media, you name it. So that is, our perspective and my perspective on investing in the space economy, is we're looking for companies that are contributing to the growth and development of the economy in space.
Tom?
So I flash back about 20 years to when the internet was first kind of booming, and early on people said, "Hey, we're an internet company," and it wasn't long before you didn't hear that anymore. People had a business and they did their business, but it wasn't an internet company. I think the same thing will happen here along the way. I think as an investor, what you really look at is it going to make money? What do I think of the opportunity? So regardless of where it's happening or how you define it, that's kind of what, this is an investment panel. That's how we ought to be thinking about it.
And do you think we're seeing this shift at the moment into the mainstream because space companies now have the potential for the first time really to potentially make money?
I think we can talk about all the factors coming into play here, but there are a lot of things coming together right now that make it a more attractive opportunity for kind of the venture class, which it hadn't been until recently. The amount of investment that you need to get something up and running is lower than it used to be, and I think the opportunities that result from that are changing.
Okay, and Bogdan as well. You talked earlier about how we shouldn't look at a space company. It should be a company which maybe does 20% in space and then maybe 80% somewhere else. Is that really where we're heading when we see this shift in the industry towards space becoming mainstream?
Well, I think it's just the companies that have that sort of model will be better positioned in the market. And so in the same way that you don't say that, we're an American company, we're a company that does, 50% of business in America, and then we also do 50% of business in Europe. And there are some good examples of companies that already do that. And I think just recently in the press there was a company, I don't remember whether it was Plantify or Local Roots or something like this. It's a vertical farming company. And basically what they do vertical farming, and then at the same time they have a contract with SpaceX to develop vertical farms for potential colony in space. So in this case, they will have an exposure to the space market, and probably space market can be a bigger part of their profit. But then at the same time, in the short term, they have the terrestrial market that can support their operations. And this is very important for the overall market, because that's when investors are going to when investors are making the decision whether go to that industry or not, or go to a specific company or not. Having that space vision is very interesting and exciting. But the question is, do you have the yield, do you have the return in the short term to support your operations? So, and because of that, it's just those companies that understand that and understand that early on, probably going to be in a better position to raise the capital, survive, and succeed.
And do you think we need a change in culture from looking at the space industry to looking at this, just as Joe was saying, as to a different place to do business, almost space becoming, I've heard batted around a few times, the eighth continent?
Look, I think what's very important for the space industry and everyone involved in it, right now we do disservice to the industry by saying that it is a space industry. And I think it's just very important, actually, what Jeff Matthews and Delhi team in large, at the very beginning, what they announced that they're going to look at the industry, and they're going to think about how to redefine it, how to really put the industry niches in it, redefine the supply chain in terms that are understood by the investors. Because right now there is a lot of interest in it, but then when someone is thinking about, okay, how do I invest into it? The moment someone says, okay, space, straight away everyone thinks about asteroid mining, which is too far, or space tourism, which is exciting, but it's potentially a very small market. And breaking that down to the investor and saying, well, actually, there are lots of other businesses, that can work in space, and breaking that down for the traditional investor is very important for the overall industry. And then also, to Tom's point, just earlier we were discussing that in terms of for companies looking for exits, it is also very important for traditional investors, strategic investors, to see that there is not a space company, but a communication company, and therefore they can address certain strategic investors in the communication business.
Yeah, I take a little different view on some of your earlier comments, Bogdan, about the need to have space, to have sort of a space part of the business and then also a terrestrial part of the business. I think that maybe in the past that was true, but I think now we're starting to see the space market and the space sector grow enough where there are pure play space companies who are building, doing things in the space economy. The space market was about $350 billion, give or take, depending on the source last year. That's revenue, so that's making money. It's like there are space companies making money. And there's also was $3.9 billion across 112 companies invested in private space companies last year. So many of those, and the ones that Space Angels has taken interest in are doing launch, communications, Earth observation, some of these applications that are very much focused on the space technology or the space component of the business. So that's what we like to see. Curious to know your thoughts sort of on this, whether a company should be a space company first and only, or versus have some other market and then do space on the side almost. Is that
surely
what you're saying?
that adds in as well to how do we define a space company as well?
Yeah.
Look, I think for certain niches, it's certainly true, and they can be purely space in terms of the place where they do business. But then for others, when we start thinking, for example, in space manufacturing, and the example that I'm going to draw, just to kind of go to the industry that is already mature, so that we can draw the parallel. Birds, bees, company started in 1984. And was kind of, revenue making, kind of, lived by, survived. And then came 2007 and they were bought by Clorox for something shy of $1 billion. So the question is that they developed a certain market niche, but then to really grow big, they had to be part of a bigger business. So then the same that, someone doing just in-space manufacturing, it's a very sweet proposition, it's very good, but you need to have huge on-Earth operations in terms of the business development, in terms of the operations, in terms of marketing. So to support that just within space operations, it might not be profitable. We're yet to see that. So where I see, for example, development of made in space, they're probably going to develop a great technology. They're doing great, and then at some point, I know someone like 3M comes in and buys them. Yeah.
Yeah.
And then
I see your point. That's a good point.
Do you want to pick up on that, Tom?
Yeah, I was just going to say to Joe's point earlier, and I'm thinking of the Space Foundation numbers, but I look at that 350 billion or so. A lot of that is actually hardware that's here on Earth, I think, if you look at how that's actually broken out. And so I think we're not, to say the space economy right now is I don't think of that as being all in space. And I think just beyond that, though, it's going to be a gradual change. Things are going to be, the numbers are going to get bigger as the more pure space play happens. But we're not quite there yet. And I don't think the pure space piece is mainstream at this point. I think it's more, there's going to be ties back to Earth for a while.
Yeah, I agree. I think I would completely agree that most of that 350 billion is a transaction between a company or a person on Earth and another company and a person on Earth using space technology somewhere along the way. I think that's an interesting thought experiment to think about. When does that shift to in space?
So what do you think we need to be able to get to that stage then?
Well, I'll go.
Now it's passing to you.
So, and this is a theme that we talked about, and I will probably keep harping on it, but as I look at what's being invested in terms of what we define as the space realm, it's going to be, as an investor, seeing exits, seeing things kind of progress through the channel, have good outcomes, and then keep stuffing the pipeline with things that are more and more kind of oriented towards pure space plays. And I think that takes time. I think we've got a great start at this point, but there's a lot of ground to cover from here.
So do you think now is the time for commercial space, particularly with mainstream investing, or do you think we've still got a bit more of a cultural shift and a few more years to go before we get to that point and we see those companies making money?
Well, it depends on what you mean by mainstream investing. I think there are, for the first time, or maybe there are more opportunities for mainstream investors to invest in space companies now than there have been, but it's still not very robust. Like in publicly traded, where you could buy companies where you can buy stock in a space company on a public exchange. There's still very few opportunities for pure play or mostly space companies. I think the vast majority of the companies that we've been discussing at this conference are private companies. So that, depending on your definition, it's hard for mainstream investors to invest in private companies. But space angels and others are working to make that more accessible to investors. We think the biggest challenge for people to invest in space right now is access. It's hard to find good companies to invest in, and it's also very difficult to evaluate those companies. So that's why we approach the market as trying to curate the industry for investors who are interested, to bring more investment into the industry, to help investors make good decisions, and it works out good for companies because they can get access to this capital.
And Bogdan, you wanted to pick up?
I think they go hand in hand. Yeah, so you can't have one without the other. Yeah, or you can't wait for financial markets to develop to do the industrial development, or for industrial development, without the financial markets. They really should help one another. And to build on Joy's point, and also what Buddy Arnheim in the earlier panel, he was talking about VC investment. Actually, I think he stole my cue cards. But building on what George just said is that you need to have the financial ecosystem. So really, you need to develop the complete financial cycle from angels to venture capital to private equity to the public market, and we don't have that yet. It's yet to be developed. And also, we have to understand that when we're talking about space, it's a completely different scale. And actually, if we didn't have the internet billionaires, we probably would never get to where we are right now, because actually, in addition to angels, because of a completely different scale, we needed to have super angels. So right now also, when talking about VCs, we kind of need super VCs, or we need VCs that are comfortable writing $1 billion check. And that wasn't the case 15 years back. 15 years back, if you had a $350 million VC fund, you were humongous. Right now, well, you're $1 billion fund, okay. Yeah.
Do you think that's a case of people such as Jeff Bezos, they almost want to, just as how with the internet era, you could have a kid in the dorm room who could come up with an idea and create Facebook or another $1 billion business? It's the same thing. So by reducing cost of access to space, and people like SpaceX and Blue Origin doing that heavy lifting, it enables many more people with many new ideas to come in with these new companies.
Actually, I have a very different outlook on that. You don't need a lot of money to start in space, but to scale in space and make money there, you need enormous amount of capital. And also that needs to be a risk capital. there have been a certain amount of government capital for large installations. If we take a look, to Galileo installation and some other things, like over 13 billion euros, but it's been done by either states or super governmental organizations. And right now we need risk capital. And here actually as well, just going to the earlier point, is very important for us to redefine the space industry so that we can go to the traditional investors like sovereign funds, like institutional investors, who are very conservative with their money. Look, it's pension fund, it's someone's future, so those investors have to be conservative, yeah? And we need to basically de-risk the industry for them so that they come in with the bigger checks and we can create a bigger financial ecosystem.
Yeah, actually, I agree with that. In our experience, space companies at the early stage need just about, slightly more, but about the same amount of capital than general tech companies. I mean, if you look at the seed and Series A stage, it's about the same amount of capital. So it is just as easy, or you need just as much capital to start a space company as a tech company these days, today. But I also would agree that in the later stages, more capital is needed. But I also, we think that the space companies, the few that have exited, have been able to use that capital very efficiently and generate good returns. And it's a very small data set, but compared to general tech, space actually looks like has performed well. And again, very small data set so far.
Yeah, I think by the way, I've seen the Space Angels graphic, and it's pretty compelling. But one thing I would say is in my experience, you see these business plans come across, and they say, we need a Series A of this much and a Series B of this much, and then we're going to be done. And it's going to be so much more efficient than the way things have been done previously. And my experience is that never happens. There's a Series C, D, and E, and so it takes a lot longer and a lot more money than they think. So the rounds may look the same, but the business plans don't, play out the way they think.
That's true, but I think it's a myth. Entrepreneurs sometimes think that venture capitalists want to hear that, oh, this is the last money I'm ever going to need. But if I'm going to get good returns on that capital, I want to put more money in. So as long as we're getting good returns on that later capital, I think it's okay.
Yeah, I think this will be an interesting phenomenon. But I see a lot of pretty inflated valuations. And so you've got these companies that are moving along, and they've got pretty big valuations, and they got to live up to them. They've got to exit, they've got to execute. So we'll see how that all plays out. But when you raise those later rounds, that escalates the valuation.
And do you think we're just seeing people, there's a growing public appetite for space? I mean, the SpaceX launch the Falcon Heavy at the start of the year galvanized space for the first time since Apollo. Next year's the Apollo 50th. Public appetite's growing for space. We've got these reports out, such as the Morgan Stanley one. Do you think we're going to see a growing number of people who just want to invest in space to help drive forward the industry?
Yeah, I mean, we're certainly seeing more and more interest just in the general public, in space in general. And some of those people are investors and interested in investing. So we're seeing that people really take notice of space and want to get involved.
Look, I think slow and steady wins the race. And what space industry needs is not a lot of appetite. It needs persistent money. It needs persistent investment. And that investment should grow over time. The worst that can happen right now is that lots of interest, then lots of companies come in and invest in space just because they feel that they need to have something in their portfolio that is space related, and the same happens what happened with fintech or green tech. You just have kind of, well, not bubble, but you have this steep curve and then it goes down. It just doesn't give you enough time and enough capital over a certain period of time to develop the industry. So
what needs to be done to prevent that from happening?
Look, I think what Space Angel is doing, what InQtel is doing, and what we're trying to do is basically what's called smart money. So people who come not only with this money but also with technical understanding, with understanding of the market, with business development, how the contracting works. Because still, space right now is a lot of that driven by the government. So an investor who comes in needs to understand the technical aspect, needs to understand the financial aspect, and also need to understand the government aspect. And so, we just need not just a lot of money, but we need also intelligent money.
So, Joe, in terms of where we are now, what is actually driving forward this interest in space? What are the key factors?
Well, I think I'll point to that Morgan Stanley report that you mentioned, which I thought was really good. They mentioned four areas that are really driving the growth in the space economy. Reusable rockets is one, and we're seeing better access and lower cost access to space on the horizon. The global demand for wireless data is driving a lot of investment in the space industry right now. More financing coming in, heavy capital flows coming into the industry. and also the need for space-based military capabilities. I think there's a lot of attention on commercial space activities, but the military and governments globally, our investors are seeing an increasing demand in that sector of the space economy, and there's interest in investing in that too.
Yeah, let me talk about that last point just for a second. We mostly do intelligence and not defense work, but we are seeing from our government customers a lot of interest in what's happening in commercial space. And previously that wasn't out there for them, so it's a way of augmenting what they already have, maybe taking exquisite assets and using them differently and leveraging commercial innovation to do sort of the more run-of-the-mill things. And I think there's a lot of interest in that. It changes the way they do their missions.
And in terms of...
sorry, can I just alternative point to the Goldman Sachs report? And I think a lot of that is driven by extra liquidity. There is a lot of extra liquidity in the market. A lot of investors are looking to allocate large sums of money. Space is somewhere where it's been proven that investments can be very profitable, but also it's a part of the market that requires a lot of capital. So if we draw the alternative from another market, if you're Berkshire Hathaway and you have $70 billion in cash that you just need to put somewhere, so probably Warren Buffett just is not interested in space that much, but if he was, that would be a perfect opportunity.
And in terms of where we're heading with private or mainstream investment in space, what are the risks and what can be done to mitigate those?
Yeah, I think there are probably a number of risks. The ones I've seen, one is, do you have a business model? There are a lot of companies that get funded and sort of figure out along the way, and I think that needs to play out. So we need to see real revenues, real traction. I mentioned the part about people think they need a certain amount of money, and it's actually 4x what they think they need. So is that money out there, and who's going to provide it? Just execution in general.
Yeah, some of the more technical things that we're seeing risk for companies, just long customer conversion cycles, especially in Earth observation business, lack of sort of analogies to other industries. Venture capital folks in the tech industry can draw upon lots of history, and it's harder to draw those analogies in space companies sometimes. I don't know what else you guys think.
I think a couple more points, and so one more tactical, executional issue. With the tech companies, for VC funds and for the entrepreneurs, there are very clear execution models and metrics. You're talking about cost of customer acquisition, conversion rates. So everyone understands what we're talking about. You start talking about space. Well, three of us are going to look at the same company, have completely different view of it. Yeah. So that still has to be developed. Yeah. And usually it comes with bumps. So it's very important that we really get a lot of smart people onto it. That's one. And then two is that overheating market, I think right now is actually is a potential risk, because people burning their fingers on it can just spoil future investments by other investors.
So you mean valuations, or?
Well, the valuations as well, yeah. But I think just too much, too many companies or too much money just coming into the industry, yeah. Because the industry is still pretty shallow, so it's very important to work with the companies to develop. We can't use the conventional VC model where, look, we invest in 10 companies, 9 of them are going to go bust. The market is too shallow for it, one, and then two is each of those companies are much more technically complex that you really have to help them to develop. You need together with them to bring them to the next stage.
Well, I think that's why traditional Silicon Valley VCs are going to have trouble. But I think sector-specific funds like Space Angels actually will win in that environment.
Like NQTel and NewSpace
Right.
Capital. Absolutely agree with you.
Do we need to mention all three companies?
I just want to add one thing, which is access to space. You got, I'm thinking of the Falcon 9 that's going to go up hopefully in October with half the small set industry on it. You got a bunch of companies that have been waiting for this to happen, and they've got to hit milestones, and they've got to be able to raise against those milestones. And as that gets pushed out, it gets harder and harder for them to stick around. And so that's a problem endemic to space.
Because obviously things can go wrong in space, as with any other form of transport. Are we going to see a rise in investing in insurance companies as well, and people who deal with that side of things? So when we think of space going mainstream, it's not just the hardware, but it's all the businesses who deal with the side products.
Do you really think insurance business needs another industry where they're going to lose lots of money?
In Europe.
I think airlines. I think they're already so fed up with airlines. There's definitely going to be development of the whole ecosystem around it. Yeah, and look, airlines, and we already discussed that. Even though airlines don't make much money as an industry, yeah, there is lots of companies that the whole economies that they drive forward. So the same can happen with space for a while, yeah. But then also look, we have great examples when companies make lots of money in space, yeah. So definitely there is going to be growth of ecosystem, and it's a natural progression. It's definitely going to happen. There is no way to avoid it. It's just all the question of the investment horizon and then tactics.
And you mentioned airlines, and it's an interesting point because obviously, as we discussed before we did this panel, space tourism at the moment, we can't see how it might potentially make money in the long term. But you look at when the Wright brothers first flew the flight, and one of the brothers was quoted as first flight, and he was quoted as saying, what potential is there for the aeroplane? He didn't even believe it could potentially cross the Atlantic, and now we live in a world which is transformed by flight. And do you think perhaps we just haven't thought of a way yet, and there are business models that we haven't yet seen, so something like space tourism could develop and become viable in the long-term future?
Yeah, I certainly think space tourism can be a viable sector, and we're looking at there's some things going on right now that reinforce that. There's companies looking at private space stations, and I think in that particular, like creating a destination in space for people to travel to is a first step. And thankfully, NASA and other government agencies are leading the way there and looking to invest alongside private companies. There's a effort now about looking at the future of the ISS and how we can commercialize LEO. I think that's what it's going to take for space tourism to be a sustainable long-term market.
Is this something you agree with?
Look, I think any industry in space has great opportunities. And look, if we draw the parallels, really, it's difficult to draw the parallels, say, with the .com or with green tech or fintech. Really, we have to go all the way back to the age of new discoveries, yeah, to really draw the parallel. And that's what's happening. We're opening up this huge market, yeah. Well, huge opportunities. The market is still on Earth because market where people are, and every industry, transportation, tourism, manufacturing, mining, any of those industries have huge opportunity in space. It's just a question of how long is it going to take to get there, And if we're thinking about, going mining, okay, it's a little bit kind of further out. If we're talking about LEO, I mean, what happened in March when NASA just said that, look, we are basically stepping away from it. We're leaving that to the commercial industry. It's mature enough for the commercial industry to step in. So, and I think that's just also a very right approach that we have to take it stage by stage. And it's also part of our job as investors to educate our investors and the rest of the market that it's going to take some time to get to certain milestones, and we have to do it step by step.
And is it fair to say, I'll pick up with you in a second, Tom, that there's actually nothing new in terms of what we're doing with space? We've explored Earth, we've expanded Earth, and now the same thing's happening in space.
On that point is that I love talking to our technical folks. And there are some things that when they say that even me with C in physics understand. And then there are other things that you really don't expect. Like you don't think about when you're driving a car on Earth, and you switch on the headlights, you don't think that the light that goes forward actually pushes your car back. Yeah, in space you have to consider that. So yes, it is still communication, it's still transportation, it's still mining, but mining on Earth and mining on asteroids is two completely different things. Yeah, so in principle, our needs hasn't changed much. It's still security, entertainment, and etc. But it's going to be done in space in a very different way.
I was just going to pick up on that and say, if you talk about asteroid mining or space tourism or anything else, there are things that you have to do along the way to make those real. And I think sometimes, those are going to lead in different directions and develop other capabilities and technologies that become other businesses.
And at the moment, in terms of space, we hear this phrase battered around quite a lot, data being king. Is that the case? Is data really the best place to be investing mainstream at the moment?
It's one of the places. I don't think it's necessarily the best or the only. I think there's a lot of data being generated by this massive number of new small spacecraft doing Earth observation, and there's huge opportunities in markets for collecting that data, for transmitting, getting that data down to the ground, processing it, and then building platforms to get it in the hands of customers. So we're looking along that entire value chain, from starting with the hardware all the way to the customer channel. So we'll invest along all of those areas.
Yeah, I'd echo that. We've got a space investment framework we've been working against for a couple of years now, and data is part of it. It's not the whole story by any means, but it's definitely part of the value chain. It's core to what our customers are interested in, the data and the analytics that come off of that.
And what specifically in QTEL are you looking for when you invest?
In some ways, the same as any investor, and in other ways, we have our unique twist. So financial return's key. We need to make sure that we see a good business there and it's going to be sustainable and be around for our customer base. But we also, before we do an investment, we go back to about 10 or 12 different agencies we work with and ask them for a formal statement of support to commit to a deal. So we kind of know going into the deal what they're looking for.
Okay, well, we've got about 15, 20 minutes left, so I thought I'd open it up to audience questions, then we'll come back for one or two final questions. So has anyone got some questions? Stunned in silence. You're an American audience, come on. There's a gentleman at the back there, and then we'll come to you in the check shirt.
Yes, I'm an American, but I live in Australia, so I'm not sure it counts. Hi, Tom. David Wood here. It's been a while. I can think of a number of missions, as can Joe, which don't take millions of dollars or tens of millions of dollars or hundreds of millions of dollars or even billions of dollars, but they take tens of billions or hundreds of billions of dollars, which puts a bit of a lie to the classic VC line that money isn't the issue, right? So if we can define missions that might have an ROI measured in months, return on investment measured in months, that are huge potential, that have huge potential societal returns, but they're just so costly, is the VC model really the thing that needs to happen, or do we need some different kind of financial model to explore those sort of opportunities?
I would say the latter. You're going to need some different model. That doesn't mean it's not out there or it's the wrong approach. I just don't think that's what the VCs are set up to do. So, yeah, that'd be tough for that model.
Yeah, I agree. I think venture capital is one way to finance companies. It's not the only. And in Silicon Valley and elsewhere in tech companies, that's the dominant way. But a lot of these other industries that we've mentioned that are going to be part of the space economy don't use venture capital as the primary way of funding. So oil and gas industry and extractive industries are one example where there are, an oil and gas company, for example, takes 15 years and $30 billion before you get 1 barrel of oil out of the ground. That's not funded by venture capital. Neither should resource companies in space, perhaps. So it's a different model, but it's still focused on returns. And I think one of the points you made, which is a great one, is that you may need $100 billion and 30 years to do something, but if it's the NPV or the return on investment is positive, it's still worth doing. Probably doesn't fit with the venture capital model, but it likely fits with some capital that is looking for those long-term returns. Talk a lot with university endowments. One of the biggest asset classes for university endowments is they invest in timber, in trees, because they're extremely long-term, extremely stable investments. They're not as high return as software, but it's the right types of returns for that type of capital.
Can I also just add to what other panelists said? And I think it's the question that there should be other funding models, but we shouldn't disregard the traditional VC and private equity. And if we're thinking about missions that are taking too long or too costly, it also might be the case because we don't have the relevant technology yet. And to develop this technology, just to push the general technological barrier, frontier out, this is where VCs can help, focusing on more short-term objectives. And just step by step, we're going to expand these technical horizons so that, those longer-term, objectives are going to become shorter-term and cheaper. But not to say that we shouldn't look at alternative models. But then when we're thinking about the traditional VC models, because the tickets are so high and because we have to more and more draw in very large investors like sovereign funds, we actually have to give them very low-risk models And to do that in VC is complex, and structuring the right product for them, that's part of the challenge. And it's possible to do it, but we, again, just have to focus on the right parts of the market to do it. And that will help to develop the whole ecosystem that will then also help to solve these longer-term objectives.
Does that answer your question? Okay, I think the gentleman in the check shirt at the front had a question. Oh.
Hi, I have a shorter, simpler question. Does
Thank
each
you.
of your investment groups have a specialty, perhaps, that differentiates you from each other?
So I think I'll answer for Space Angels, but I think in general we maybe invest in different stages. So Space Angels is focused on the seed and Series A investments. So early stage investing, we think that's where the big opportunity is. We have over 10 years of experience in investing in early stage space companies, and we're specifically designed as sector specific funds. So there's data that shows that sector specific funds run by fund managers who are experts in the sector that they invest in have higher returns than generalist investors. So that's really core to our strategy, is that we want to be specific to space, build up the capability to evaluate deals, make good decisions, and generate high returns in the seed and Series A stage.
So we're set up as a strategic, so we're akin to like a corporate venture capital firm. The sweet spot for us is Series A, Series B. We co-invest, and we're typically pretty small players on the cap table. Space is one aspect of what we do. We do actually about 50 plus new deals each year. Maybe 10% of those, 15% are space related, but we're looking across a lot of different things: cybersecurity, analytics, materials, optics, robotics, et cetera. So it's a pretty broad look at things.
And I'll mention both, like how we're different, how we're the same. So we're primarily a private equity shop, and we're the same in terms of how Space Angels operate, that we are focused on space. But then also in the same way as in QTEL, is that we're looking across the various industries that are exposed to space. So it can be cybersecurity, materials, etc. And so we operate, well, pretty much, it's early stage, a little bit later, and we are much later. Yeah, so we are B plus. In terms of investment, and also to what Joe said, that it's very important to have your technical expertise and then also your financial expertise. So we have a big team of technical experts on our investment team, and at the principal analyst level, lots of PhDs, lots of IQ in the room, and then also we have a strong financial team. In our financial team together, they have 4 unicorns, and one of those unicorns we count it as a double unicorn because it was over 2 billion. So we say that we're a 5 unicorn team. So combining those two together, I think is the important value proposition for our investors and also for the companies that we are working with.
You okay with that? And next question about that. And then we'll come to you after.
The acronym IPO has not been mentioned, and unless I'm mistaken, few, if any, new space companies have done an IPO. Is there a reason why that's been not a part of the discussion, at least this discussion, or maybe a part of the industry as a whole?
Sure, I'll take a crack at it. I think part of it is due to just a slower IPO market in general. Over several of the past years, it's been very slow. It has started to pick up recently, and especially actually here in Seattle, there's been a number of really high-profile IPOs that have taken place. Dropbox and others were, very recently. So I think in general, we may see more IPOs in the general tech market, and that might, space may be a beneficiary of that increased activity. I don't think that there's only a few companies that would be eligible or sort of qualify or be far enough along to do an IPO now, and they've been able to raise private money. So if you can raise the private money, why do an IPO?
Yeah, I mean, we talked about exits in general, but IPOs would be even better. I mean, but we'll take acquisitions as well at this point. But I think that's key for where we need to go next, is to see some of these things exit successfully, and IPO would be great to see.
And it just goes to one of the points I made earlier, that we need to develop the whole life cycle of the financial life cycle. Yeah, and we have Space Angels, we have some VC, we have private equity. Yes, we need to develop the public risk capital market for the space industry, and it will happen. It's just the question is that we are right now in a little bit early on, Thankfully, we don't have a dot-com, rush, where lots of people pouring money into the businesses that haven't made any money yet, just because, oh, look, one day they will fly to Australia and going to bring back $300 billion worth of it. So it's just a slower, but that means that more robust, more long-term, healthy development of the market. It will come.
Okay, and next question.
For a long time, investors were looking for companies that could be a bellwether to other investors to join them in their space investments. It seemed like Planet Labs for a long time was a focus of a lot of attention. We've been hearing a little bit less about them in terms of the forefront. Maybe OneWeb is playing that role today. Who would you say are the bellwethers that you're looking to as you're looking to gauge the health of the space industry as it's growing?
I must say that I just don't like the whole approach. I think what's very important is just look at overall how the market is doing, looking at different segments, especially the market like space market, it kind of all-encompassing. You have absolutely everything from transportation to communication to Earth observation. So you really have to look at the niches. And I can tell you that some of the companies that we're working with is, one of them is doing antennas. So antennas doesn't sound exciting, but when you're thinking about antennas that are 2/3 cheaper, 3 times more powerful, twice smaller, suddenly it becomes very interesting because it just enables completely different business models, completely new different markets, and it's exciting. Can it be a bellwether? Probably not. Can it be an indication of healthy market and interesting market? Absolutely.
Yeah, I think there are a couple. I think Planet is still one of the bellwether companies, but there are some others. We look at 3 different. I would answer your question really 3 different ways. One, in sort of the in-space economy, looking at companies like NanoRacks and Made in Space, see them developing those capabilities in space. And Earth observation, there's a lot of new entrants. Particularly ICEYE would be one to keep an eye on and see how these non-visual imagery companies are developing. And then in the launch industry, we really are interested in the small launch companies like Vector and also Rocket Labs to see how those businesses turn out. So those just sort of 3 areas that we've definitely got our eye on and some companies that we're tracking.
Yeah, I'd say, sorry, two levels probably, the SpaceX and Blue Origin kind of level, and then on the more the venture side, the ones that have raised a fair amount of money, gotten a fair amount of press, Rocket Lab, Planet for sure, Spaceflight, Spire, things like that have been around for a few years. Like those are ones to track. It's a pretty fragile ecosystem, and a lot of them are kind of wound together. And I think it's going to be interesting to track if one of them has trouble, how does that affect the ecosystem overall?
Okay, any more questions? Gentleman in the white there.
Hi, Udit Mehta from Out There. One question that I have is, it's becoming more and more clear in my mind that the industry, to have a sustainable growth path, requires a new financial ecosystem that at some point needs to develop. What, in your opinion, would be the enablers to have a public interest, democratized financial ecosystem for this industry? What would be those enablers?
Yeah, I think that's a great question, and I don't have a right answer necessarily, but I think I've been thinking about this a lot too. So there's a lot of interest in space that we talked about in the public, but there's very few opportunities for the public to get behind space companies and to invest or to even contribute to space companies. Even if you're just a millionaire, you can't. It's hard to invest in space. I mean, you have to be like a billionaire to start a space company if you look at the history. And what that has resulted in is a world where the humanity's future in space is decided by 2 or 3 billionaires and 3 or 4 national governments. So as far as democratization of space, I mean, that's the antithesis of that. It's and I don't know, maybe that's good or bad. I'm not necessarily trying to say that that's a bad thing and that SpaceX and Blue Origin aren't doing great things, because they certainly are.
So what do you think needs to happen, just picking from that point quickly?
There needs to be ways to get to activate the interest in space, activate the talent and the money around the world that currently don't have any way to contribute. So they're disenfranchised right now. There's people who want to contribute and want to get involved, and there's talent and expertise and money that are on the sidelines, and that's not helping us right now. It needs to get in there. I don't have the answer for how, but there's some exciting things on the horizon that might help fix that.
A couple of points, and I think something that investment community can do, something that governments can do, and then something that companies, where industry can do. Starting from the industry, we already discussed that clearly defining what space industry is and how to look at it and how to analyze it in a very traditional way is going to do wonders, because suddenly the investment community, the traditional investment community, would be able to understand that market. And suddenly they will see, oh, it's not something scary, very risky and very expensive, but it is just a components company, someone that does microelectronics, and it just radiation hardened microelectronics that can fly to space. Well, brilliant! We've done 15 deals in microelectronics. We can do one more. So just doing that is going to be a huge step forward, and that's why I think the job that NewSpace Frontier Foundation and Deloitte are doing together is very important. That's one. Then two is what investment community can do. I think more specialized, industry-focused investment firms is very important, and that requires the technical experts and financial experts to come together. And actually, government is going to play a big role in it if they just like Luxembourgian government, that they really stated that, look, we are fully behind both space and space investments. The fact that Luxembourg Future Fund invested in space companies and also invited traditional investors to participate in it, so that it doesn't look like some esoteric investment, but make it more and more mainstream. So government can play a role in there as well. And I think all of that together, as more and more players enter this market, is going to become more democratic.
Okay, and just time for one quick last question, gentleman there.
Thanks. So this is directed more towards Joe and Bogdan, but so in the previous policy panel, they mentioned ITAR concerns, and a lot of that was towards the vein of making the space economy less U.S.-centric and more international-based, citing ITAR maybe as a reason why it's still so U.S.-centric. For potential investors, is ITAR seen as an inhibitor towards major investment, towards viable space companies, and a reason maybe not to invest as much money as they could? I'm not sure if that's ever been seen before, but I'm just curious.
Joe, I go first. Okay, that's an excellent question, and I might have a skewed view of it, simply because my background is in defense. And actually, one of the reasons why I started this fund, because with my colleagues, is because we saw, well, look, we understand ITAR really well, and this is what we think scare off a lot of investors, and we actually can explain to them that look, it's not an issue. That's one, and then two is we also know investors who invest in companies that deal with ITAR. Yeah, so there is that kind of view of, oh, look, ITAR, I don't want to touch it. But then at the same time, look, we need to have expert controls in place, and ITAR is just expert control in the U.S., but all other countries have expert controls in place as well. So it's there, it's a reality. It has to be the case, and we just need to learn to deal with it, and again explain to the investors how we deal with it. Also, when we're thinking about how we work with the companies, we just need to clearly understand what's going to be regulations in each market. It brings a little bit more complexity. It becomes a little bit more costly, but it's not cost prohibitive.
Yeah, and from our perspective, we have not seen ITAR be a significant detractor to investors investing in early stage companies. It's in our experience, it's more of a second order effect, where if the company intends to sell to a global market, what is the additional overhead and just extra cost involved with doing that? So it hasn't scared away investors because sort of on its face, but it is taken into consideration for companies who want to sell into a global market. There's potential for other regulations to be more of a risk in terms of investment itself, and that's the U.S. The Department of Commerce has a Council on Foreign Investment in the U.S., CFIUS, right, which is actually a really interesting acronym. So that
What does it stand for?
Council Foreign Investment in the U.S. So it's a group of people at the Department of Commerce who get to decide to potentially block foreign investors from making investments in U.S. companies. And it hasn't affected the space industry to my knowledge yet, but it has. But there's been some high-profile deals in the tech world that have been blocked. So that has space investors wondering about whether that's going to affect us at some point. So there's some regulation being looked at now to change how CFIUS works. But from the investment, through the investment lens, I think that has more impact than ITAR right now.
Yeah, I was going to come at it from a different angle too, and it's for the last couple of years we've been having conversations with our government customers about staying away from kind of over-regulation. It's a global market. These companies can go anywhere. They can sell anywhere. You can't just say no all the time. And I think they're kind of understanding that. So I think there's a change of mindset that's developing on the government side where they understand we really want to see these capabilities develop. We can't just kind of block them via regulation. So let's kind of see how it plays out and change the way that we do things. It's a slow process, but I think that's happening too.
Okay, great. I think we're going to have to wrap up very quickly, but just one final question I want to ask all of you, and it's a slightly different question, but I think it really underpins the real reason that we're all here, and it's just, what does it mean to all of you to be part of driving forward this new space industry? I'll start with you, Joe.
Okay, I'll go first. So, great question. I think I'll answer, I have two different main motivations, and they're on opposite ends of the spectrum. So first, I think that investing in the space sector and the growth of the space economy now is a massive opportunity to make a lot of money. So very selfish reasons. I think that now is a opportune time in history to be in investing in this sector. And then on the other end of the spectrum, we'll go back to the question earlier about democratization of space. I think as investors in space, we have an opportunity to help grow the space economy and really make an impact on the future of humanity and enable more people to get involved and bring all that talent and money that I mentioned on the sidelines into the space industry. And that's what personally drives me to help make this happen.
Tom?
So I agree with all those points. To just add also a couple things. One is, from my seat at Incutel, it's clearly space is relevant to the intelligence community, and it's been really interesting to see how it's developed in terms of funding things in commercial space, because I think there's been a lot of anxious waiting on the part of the intelligence community for things like this to come along that they could leverage, and so that's purely from a capability standpoint. I think that's been great. I'll also just from a personal standpoint, my observation, and this is true of me as well, but you sit in these boards and you've got your classic venture investors. And these are people in firms that are really well known, and you can see they're just really excited about what they see in these companies. And if they're sitting there looking at another software deal to do or a space-related deal, there's some level of excitement of wanting to do something like it's space-related. It's just interesting to them and to me.
And Bogdan?
Also a couple of points, personal and professional. So I'll start with the personal one. So the personal one, some people just get the kick out of the technology. And I was always a history buff. So for me, it's more the question is like, well, being part of the history. And really, we haven't seen anything like this for 300-400 years. It's really once, not in a lifetime, but basically in the universe opportunity. And being part of it is so exciting, yeah. And the second one is professional. It's amazing to work with the companies that have amazing teams, that have amazing products. And then a lot of them are struggling to get funding. Because when they go and talk to the traditional investment community, they just find it very difficult to explain what to do and what are the next steps for them. And then coming in and talking to these people in their language and understanding what they're doing, and then also being able to explain that to our investors and connecting those things and making things move forward that otherwise wouldn't, it's just such an exciting opportunity as well, and just really gives a kick.
Okay, thank you very much, and thank you to our panelists.